Tilray reported their earnings, and there were strengths and weaknesses within it. Their net revenue grew by nearly 10% quarter over quarter, mainly driven by adult beverage sales, which increased by 92% in that period, which may be in part due to acquisition and perhaps even seasonal factors, given that it increased by 117% year over year. I don't know much about that business, given that it's in the US and I'm a Canadian who doesn't drink very much, but the margins are good. 34% by my calculation, but they claim 38% excluding PPA step up, whatever that means. And the margins were significantly higher in previous quarters, which could be a good sign or a bad sign, I suppose. Maybe they can get them back up. Their adult use Canadian Canada revenue is flat, decreasing by 0.1% quarter over quarter. But if you watch my older videos, I say many times that Tilray's products in that category were low quality and that the revenue would continue to decline unless drastic improvements were made. But I recently made a video in which I explained that they had indeed made drastic improvements, which I first noticed in October, so late in the quarter. For that reason, I now believe that they will begin to do well in that business, which is a U-turn for me. Their distribution business barely grew at all quarter over quarter, and about 12% year over year. It's their lowest margin business, at about 11%, and is likely their biggest draw in earnings when you factor in administrative costs, which are, in aggregate, substantial. They lost 21 million in the quarter. How did I get to that figure? I simplified the numbers by looking at just their operating and interest expenses, and excluding things like litigation costs, restructuring costs, and transaction costs, as those can be one-offs, but Tilray has a habit of reporting them regularly, as in every quarter that I've looked at. But however you look at it, they're losing quite a bit of money. Given what I said about their product's quality going from low to high, for their price at least, I expect those numbers to improve, but they have a long way to go before they reach profitability. Their biggest competitor, on the other hand, Decibel, has been profitable for about 2 years and valued below 60 million Canadian dollars. That's not financial advice, of course, but it's how I see things.